The real volatility in silver will be, again, following gold. And so if gold runs, silver's going to run. If gold weakens, silver's going to weaken, but not as much, because it'll be buffered by the industrial demand. But I guess I have a very strong conviction gold's going to continue to shoot higher, and we'll go through its all-time high sometime soon. I don't know what soon means, but it's, I'm going to say within like a year or two. Like, I have very strong conviction gold's going to blow through 20, I think it's about 2,200. That's the all-time high in current dollars.
Silver prices have seen a decent rally in 2023, led by strong fundamentals amid increased industrial demand. After 11% gains in the first 4 months of 2023, silver prices witnessed some turbulence at higher levels. According to Ross Beaty, the founder of Equinox Gold Corp, silver's price volatility is closely tied to gold's performance. Whenever gold experiences an upturn, silver tends to follow suit, and conversely, if gold weakens, silver is likely to undergo a similar weakening, albeit to a lesser extent. This resilience in the price of silver can be attributed to its dual role as both a precious and an industrial metal. Unlike gold, which is primarily acquired as an investment or for jewelry, silver predominantly serves as an industrial resource. It is estimated that approximately 60% of today's silver is utilized for industrial applications such as electronics, solar cells, automotive components, and soldering, while the remaining 40% is available for investment purposes. Ross highlights the robust demand for silver in photovoltaic cells used in solar power generation and various electronic applications. These factors collectively contribute to its long-term strength. The gold market has recently exhibited a certain level of restraint, with gold prices displaying fluctuations devoid of significant excitement. According to Ross, this phenomenon can be attributed to a range of economic uncertainties, including concerns related to the U.S.-China relationship, Chinese economic growth, fluctuations in the value of the U.S. dollar, interest rate movements, and Federal Reserve policies. Gold prices edged higher on Monday as investors priced in a pause in interest rate hikes by the Federal Reserve at its policy meeting this week, with a focus on the U.S. central bank's rate outlook. Ross anticipates a continued upward trajectory for gold and foresees its potential to reach its all-time high soon, possibly surpassing the $2,200 mark. We will now bring you clips from Ross Beaty's interview with SOAR Financially. But before we do, if you want more videos like this, hit the subscribe button and turn on the notification bell for more updates. Thank you and enjoy the video.
Well, silver is a very different metal than gold in many respects, in that it's fundamentally an industrial metal for over half of its demand. The other half is more or less as money for investors. But you know, gold has 99% of its uses as a store of value, as a form of currency, whereas silver is used in so many things. And so you have to look at the industrial demand for silver and the investment demand. I always say it's a schizophrenic metal because, you know, it doesn't know where it is. It doesn't know if it's in a precious metal camp or a base metal camp. On the industrial metal side, it's a very strong world, because the biggest demand now for silver is in photovoltaic cells, which is, of course, for solar power, driving huge amount of silver demand. And it's an electronic metal, so it's used in everything digital, everything electronic. And that's really driving its long-term strength as an underpinning of current prices. But the real volatility in silver will be, again, following gold. And so if gold runs, silver's going to run. If gold weakens, silver's going to weaken, but not as much, because it'll be buffered by the industrial demand. On the supply side, you know, there's not a lot of new silver coming out of new mines, so it's kind of like gold. It's kind of flatlining right now on the supply side, which is a bullish factor. If you have rising demand and flat or declining supply, you're going to have higher prices. Absolutely. So I see that happening for silver too. You know, summer is almost like it just didn't happen. You know, there was nothing that went on. Gold kind of bounced around a little bit up, a little bit down, a little bit sideways, and it hasn't been very exciting. But I'm guessing that some more exciting things are bound to happen this fall, and I'm hoping they're going to be on the upside. So, but quite frankly, it is a bit of a wonky market right now. Things are wobbly economically. You know, the U.S.-China situation, Chinese growth. What's going on with the dollar? It could kind of go almost every way. What's going on with interest rates and the Fed? Quite frankly, it's wobbly, and I had strong convictions on gold, and generally speaking, I was right for the last, say 5 years. But at the moment, I have to say the fundamentals are still pretty good. Strong demand, flat supply. That's usually pretty good for price. And then you have all these macro things that could happen, like an easing, for example, like a decline in the dollar, like, for example, a correction in the major stock market. And all of those are going to be good for gold. But gold's in pretty good shape for producers like us, 1920, 1930, 1950, in that range. It's a very good price for us. We're making good money. In fact, most of the gold space is making pretty good money. So it's okay. We're not unhappy, but I guess I have a very strong conviction gold's going to continue to shoot higher, and we'll go through its all-time high sometime soon. Like I said, I'm not unhappy with where it is. It could have gone either way, and the fact that it's still over $1,900 is actually very bullish. So when things change, it will go higher. It'll blow through 2,000, I think, and then I think maybe to new highs. So, in the face of all kinds of negative sentiment, gold has done really well. And demand stays strong, and it's both investors buying, most of it's the investor market, let's face it. Most investors buying gold and central banks buying gold as a store of value, long-term value, exactly what gold has always been good for. It's a different form of wealth.
Since 2000, with the advent of radical monetary policy, gold has consistently outperformed major asset classes. During the initial decade of the gold bull market, mining equities showed remarkable performance, surpassing the gains of physical bullion. However, following the peak of gold prices in August 2011, gold mining equities have notably lagged behind the rising gold prices. According to the Sprott Gold Report, the main reason for this underperformance is the belief that the current gold price, around $2,000 per ounce, is unsustainable. The potential for gold mining stocks to offer leverage to higher gold prices is often discounted or ignored. In other words, the market is not convinced that gold prices will continue to rise, and therefore is unwilling to pay a premium for gold mining stocks. This is despite gold mining stocks being undervalued on a relative and absolute basis. However, Ross underscores that this substantial undervaluation of gold equities relative to historical norms is a recent development, primarily occurring within the current year. He contends that this situation is unlikely to persist for an extended period. There are two possible outcomes. Either the price of gold will decrease, or the value of gold equities will increase. He suggests that equities are presently undervalued and represent an excellent buying opportunity.
I've watched the cycles come and go, and I can say that never in my career have I seen gold equities so weakly priced relative to the gold price itself. For some reason, we have this real disconnect today between the value of the equities and the value of the metal. I've never seen it before. In fact, in the 80s and 90s, gold equities were trading at 2 and 3 times net present value. Right? And today they're trading at 0.4, 0.5, 0.6 times net present value. So that's very unlikely. It's only this year, by the way, that's really happened. And so, it's very unlikely that things are going to stay like they are for very long. And you're either going to have the gold price collapse or you're going to have equities rise in value. And I would bet on the latter. I think the gold equities are really, really cheap, historically cheap, fabulous value. As you go down into the higher risk companies, from the seniors to the intermediates to the juniors, the discount is even more. So the juniors today, they can't get equity capital for exploration, for development. The intermediates have really crummy price to net present value ratios. The seniors are okay, but not as valuable as they were historically. And it's just one of those things. Buyers are on strike. And you could say there's a whole bunch of reasons, but it's kind of irrelevant. The real question is, when is it going to change? And is it going to change? Typically, in a bear market for equities, there's some catalyst. And when the catalyst happens, it could be a new discovery. We've had a couple of big discoveries like Skyline that have propelled value in that exploration space. It could be the success of some good stocks that have done well, like Alamos Gold, for example. It's done really well. It's really had a good run. There's a bunch of companies like that. But it'll be some catalyst, and all of a sudden, bang, overnight, you're just going to see a doubling of kind of across the board, because the metrics are going to be there. The valuation parameters are going to all of a sudden readjust to what they have been historically. Now, what causes that sentiment? When exactly is it going to happen? I don't know. But it happened in 2016. It happened in 2012. It happened. I can point to many times. And when it happens, you are going to want to own these stocks now, because it'll readjust before you know it. It'll readjust like instantaneously, and everybody's going to say, "Oh God, if only I bought that stock that I was looking at that seemed really cheap and really good value." But it'll be too late. So this is the buyer's market right now. There's fabulous value in the space, historically unprecedented in my career. I'm buying myself right now. I'm being somewhat selective, but I'm buying right now. I'm buying my own company, Equinox Gold. It's dirt cheap. There's all sorts of catalysts within that company, and there are within most companies. It could be exploration results, it could be production milestones, it could be cost reduction, that kind of thing. But today it's a great time to be buying gold equities.
Looking forward, both silver and gold hold promise for the future. Silver has seen a significant increase in value in 2023, mainly due to its high demand in various industries. Gold, with the potential to reach or even surpass its all-time high, positions both precious metals as attractive prospects for investors in the foreseeable future. What are your predictions for the future of silver and gold in our rapidly changing economic landscape? Share your thoughts in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.